What is peer-to-peer lending? Ever tried to get a loan from a bank and felt like they were judging you harder than a reality show judge? What if I told you there's a way to borrow money without going through a bank? And if you're an investor, you could earn money by lending directly to others? Sounds cool, right? But is it a smart move or a risky bet? Let's break it down. What is peer-to-peer lending? All right, let's start with the basics. Peer-to-peer lending, or P2P lending, is a way for people to borrow and lend money directly through online platforms, without banks acting as middlemen. Here's how it works. A borrower needs money. An investor, that could be you, lends them the money. The borrower repays over time with interest. Platforms like LendingClub, Prosper, and Upstart connect borrowers and lenders. So, instead of the bank making money off loans, you do. Why do people use P2P lending? Now, why would someone choose P2P lending instead of just going to bank? Easier approval. Banks reject people for bad credit. P2P lenders might say yes. Lower interest rates. Sometimes, borrowers get better rates than banks offer. No bank hassles. Less paperwork. More flexibility. Higher returns. Investors can earn 6% to 12% plus interest, better than savings accounts. Diverse investment. You can fund many small loans instead of one big one, spreading your risk. Passive income. Set up and watch the interest roll in. Sounds pretty sweet, right? But wait, there's a catch. Risks of peer-to-peer lending. P2P lending isn't just a money-making machine. There are real risks. Default risk. If a borrower doesn't repay, you lose money. No FDIC protection. Unlike bank deposits, P2P loans aren't insured. Market changes, economic downturn, higher defaults, and losses. So while P2P lending can make you money, it's not risk-free. Is peer-to-peer lending right for you? All right, so is P2P lending a smart move or a bad idea? If you're a borrower, it's great if you can't get a bank loan but still need cash. If you're an investor, it could be a good way to earn higher returns, but only if you're okay with some risk. Golden rule. Never invest money you can't afford to lose. If you're interested, start small, use platforms with good ratings, and spread your investments across multiple borrowers to reduce risk. Final thoughts. So what do you think? Would you try P2P lending, either as a borrower or investor? Don't forget to like, share, and subscribe for more finwitty information, and do press that bell icon. Until next time, invest wisely, spend smart, and keep your money growing.